Hello, everybody. Happy Sunday. I hope that you're having a fantastic day. I have some news for you. I filmed one of the most epic videos of my lifetime this past week, and I was able to have a company come out here and show us their tiny home. So backyard, they ended up taking it down. I don't get to keep it, unfortunately, but that comes out on Tuesday. Another thing is if you haven't yet, I strongly suggest that you watch my video that I put out on Tuesday and this past Tuesday, the one prior, because it had to do with the Great Reset and affordable housing options. I know there's lots of controversies when it comes to the Great Reset. I know lots of people have lots of theories and everything else, but I only related it to affordable housing options and corporate buyers and investors. So it very much goes along with what I'm talking about today. The one thing I left out in that video was the fact that the Atlanta market has had an exponential amount of corporate buyers and corporate investors buying up the most affordable homes in the United States. So what better way to talk about the Atlanta market and what corporations are doing than Sheheedah Hill. And she's going to be coming on here right now. Ta-da!
Hi!
Sheheedah!
Thank you for having me, Kristina.
Oh, yeah. Yeah, yes. No, of course. I like, this is like right up your alley. And I know that you could easily talk about your market because it's something I mentioned because I read articles all the time about what's going on, but I know nothing about specifically what's going on and what the contracts look like and how are they winning these offers and what else they're doing. There's other behind the scenes things they're doing to get these houses up, So before we get started into the article, why don't you tell everybody a little bit about yourself?
Hello, I'm Sheheedah Hill and I'm in Atlanta. And I used to be a teacher, a high school teacher, and a real estate agent, kind of doing both at the same time. I've been a licensed realtor since 2003. And then after talking about the Great Reset, when the pandemic happened, I was teaching computer science at a local high school. And I was doing real estate and I was about to quit, and I totally quit as soon as the pandemic started, basically. Well, I finished out the school year once we were, sent home. We finished it out online, and then I never came back. And I, started on YouTube. I had, a lot of clients then. So that's pretty much where I've been. And so I educate as much as possible on my channel, first-time homebuyers, and how they should, go about buying a house, especially in this market.
I have to tell you, you probably made the smartest decision in the world. School teachers have been getting it bad for the last couple of years, man. You made the best decision. YouTube's where it's at. You've got quite an audience too. Did you freeze or did I freeze? Uh-oh. Did we freeze, Eddie? Uh-oh. I think we froze a little bit. I'm sure she'll be back. But yeah, I was just going to say, I think we have a little technical difficulty here. Whoops. Oh, people like I think she's back. Oh, yeah, we froze for a second.
Going in and out. So sorry.
That's okay. Oh, that's okay. You just were like this. And I was like, oh my gosh.
So hopefully it'll be better. I'm checking my Wi-Fi now. Hopefully it'll be better.
I have to tell you though, there isn't a lot of girls on the YouTube world, and there isn't a lot of female real estate girls on the YouTube world. So I mean, we're crushing it.
Not, yeah, we're pretty much unicorns.
Yeah, women in power, man.
Yeah.
All right, so well, let's get into the first.
We're gonna have.
I'm excited that you're here.
Yes,
we're gonna have a blast. Okay, well, let's get to the first article because no one wants to hear us flapping our lips anymore. Eddie. Oh, look, Lawnmower even put your channel up there. So if anybody wanted to check you out, but I think everybody in this chat already knows who you are. Yes, I mean, like you're like a YouTube queen. Here we go. Suburbia is standing up to Wall Street. Oh, this is a great article. Investors who are scooping up houses, bully people out of cash offers, making the neighborhood shabbier. Go ahead and scroll on down, Eddie. Look at that picture. That's so funny. Look at that. I have had some nosy neighbors.
Like,
I don't know
who's moving in. Yes.
Scroll down to the article. All right. Homeowners are banding together against a common enemy, investors. That's according to the recent article by the Wall Street Journal and Will Parker's and Nicole Freeman's, who reported that the group's neighborhoods volunteers thwarting companies looking to buy single family homes, using their power as homeowner associations to regulate homes that are being used. Some HOAs believe that the rental investors buying homes in their neighborhoods made it difficult for local families to buy, the group told Wall Street Journal, and led to a decline in maintenance, which has made neighborhoods less desirable. Oh, that's interesting. To combat these purchases, homeowners will often place caps on the number of homes that will be rented in a particular neighborhood, or require that potential tenants be vetted by the association board. They do this in condos. Both taxes stimulate the attempts of large landlords to rent the spaces. All right, here we go. They're coming in and they're basically bullying people out of cash offers. Homeowners Association in North Carolina told the Wall Street Journal. He said some of the homes in the subdivision owned by investors in his Walkertown neighborhood now look shabbier than owners that are difficult to contact than their owners, and they're difficult to contact to resolve problems. Corporate landlords have been overtaking the U.S. suburbs in recent years, pricing out many first-time home buyers who are usually younger and fueling the difficulties of Gen Z and millennials have had seeking home ownership. According to the recent analysis, investors brought a third of U.S. homes for sale in January. That's the highest portion in the last decade. And some analysis have shown that these companies mainly overtaking communities of color. Their strategies adopted by suburban homeowners associations for single family homes, already common in apartment communities in metropolitan New York, in ways that can often be exclusionary to Black and brown home buyers. Suburban neighborhoods adopting these strategies to keep out powerful investors is not only novel, as Wall Street Journal has reported, but it's a flipping playbook. It's flipping the playbook. It's flipping the playbook. Okay, so the first thing I want to talk about in this article is the HOAs. And you probably don't watch all my videos. I wouldn't watch all my videos if I was a real estate agent. But one of the things I've been talking about is I've been telling people, if you live in an HOA, that is a covenant that you can add, that it's like an addendum, an amendment to your covenants.
Yes.
That you can all vote on to not allow for corporate investors to buy out X amount of rental properties. So what do you think?
In the HOA?
Oh yeah, absolutely.
Okay, and I'm in one too. But my HOA does not have rental restrictions. And I don't know how I would feel about adding them, because it's going to limit. I'm surprised we don't, to be quite honest with you. But a lot of subdivisions in my community, like in my city or whatever, they don't have them. And I'm on the fence about whether or not I would want to add them in. Like if there was a vote on it now, I probably would vote against it, just because that is going to limit the opportunity. Unless we were grandfathered in, I guess, I probably would vote against it, honestly.
I don't know.
It limits our opportunity if we ever wanted to rent our properties. And, I think there should be a cap, but to say that
that's what I'm saying,
then that's an issue. But I think cap at this point, I think we definitely need a cap, but we don't need to be, no renting.
Well, I think 20%. That's what I've always said. 20% of the houses should, no more than 20% should be rental properties. We got a $5 super chat real quick. I got to address that. Whenever they super chat, they always get priority. Yeah. Hiveable says, downsize from $700K house to a $400K house here near Tampa, Florida. $4K in equity today. I bet it does. Tampa is one of those markets, just like your market, that has exploded with corporate investors. I think that if you have an older neighborhood, especially homes that are in the 20, 30 year mark that, has been well maintained, that is like an investor's dream. They're a dream community. And if they don't have that HOA covenants in there, I think that is imperative that they do, because it can get down. Because like in our little town right down the road, there are houses, and you can see where the people have lived there and they've taken care of it. Their houses are 30 years old. I mean, the grass is pristine, the flower beds are wonderful. Then you know exactly where the rental houses start. because like they're, you'll have a block of like 3 houses, all of them being rented out. They look like garbage. They look
Right.
terrible.
Yeah.
They look
And
terrible.
Invitation Homes is huge. I don't know if they're huge in your area, but Invitation Homes is huge here. And they are buying up a lot of things. I just think definitely for buyers specifically, you have to tell the seller that who you are without, breaking any fair housing or anything like that. But you have to differentiate your offer somehow, because what makes cash so the risk involved in it, they see it as less risky, and typically sometimes it's for more money. But they would rather honestly sell to a non-renter, but it's so attractive to some sellers. They're just like, I'll take my cash. I'm not really thinking about the entire community. And that's something that a lot of sellers, once they leave the area, they're saying, who's going to give me the most money? So you just have to make your offer as attractive as possible.
Do you know who used to sit on the board of Invitation Homes?
Who?
Blackstone.
Oh,
Blackstone.
Probably.
and
all in it together. I honestly believe that. And then
absolutely.
The
they're like
yeah,
two evils on the same side,
The price range that they are targeting is that ideal first-time home buyer price range. You could very easily, if you were working, even a single parent could get a house for $250,000, $200,000.
Uh-oh. You froze again. Uh-oh. Well, I'll just say this. So Invitation Homes was owned by, or the Blackstone used to sit on the board of Invitation Homes. And then they took all that information after they scooped up a ton of foreclosure homes after the last housing crash. And they did exactly what they're doing, which is renting them out. They just scooped them up, cleaned them up, and rented them out. That's what happened to a lot of foreclosed homes after the last housing crash. And then Blackstone, who sat on that board, took all the information that they knew about them and was like, oh, what's another company we can invest in now that we know all this? We'll just go ahead and drop out of Invitation, and we'll foster this new company out of Canada called Tricon. And if you could bring Sheheedah, I don't know why I want to add a D to her name.
I know. Yeah.
At the end.
He's going to keep on taking me in and out because I don't know what's happening on my end, but yeah, I'm going out every once in a while.
That's okay. So do you have Tricon in your area too? Is Tricon?
I don't know. I'm not as familiar with Tricon as I am. The biggest one in our market are Home Partner. Well, they're more rent to own, but Divvy and Home Partners of America, they help, people present cash offers to get them approved. And then Invitation Homes is, I think, our hugest one as far as buying up in middle class subdivisions, because people have to be able to afford the rent. And they're $1,500 and $2,000, I would think, a month.
Yeah.
Break up again. But yeah, so
that's okay.
That's the price range they're looking in. But a lot, like you said before, a lot of these communities are going to try to put those rental restrictions in place. You have to have at least 60% of the neighborhood. At least in our HOA covenant, 60% of the neighborhood would have to vote to adopt that.
Right. Yeah. Do you know Home Partners of America? Do you know who sits on the board of that?
No, but is it Blackstone again?
It is Blackstone.
It is Blackstone again. But yeah, Home Partners of America, Divvy, and Invitation Homes are big here.
I'm going to find out who did. Like, if I can find out, like that company, I'm going to look to see who sits on their board. That's what I usually do is like all of these. I always say there's 3 companies that own all of real estate. If it's not an individual investor or small investor, it's these 3 major companies.
Okay.
It's Blackstone, Blackrock, and Vanguard, 3 of the biggest investors of American real estate. That's what they're doing, and they're using real estate as like the stock market. They're hedging their bets, and they've been planning this. They've been planning this since the last recession.
I believe it. Yeah, because even I think a lot of people don't realize where we were with the inventory prior to COVID. Inventory was low prior to COVID, and they were in the market. And I think it was even people weren't as aware of it. So when they got, we would get investor offers like, oh, this sounds like a good offer, but we weren't, thinking ahead of time like, oh, they're trying to take over the neighborhood kind of thing. it was just like, oh, is this legitimate? Because people really didn't trust investor offers when they came over, because you're like, oh, who is this and what's this company? But now they're more common, so people are, even considering them. So sometimes that agent is like the person in between that says, oh, this is almost like a scam offer. Like, this is a scam. Let's not go with this one. Like prior to COVID, we didn't trust investor offers for the most part.
Right. Well, I've talked to several real estate agents, and some of them don't even go and look at the house, and they're offering you $60,000 over the asking price. And so we educate our sellers and saying, well, okay, here's the offer. This is what they say. Yes, they're offering you $60,000 to hold the house, but they haven't even walked through it. How is that fair to all these people that have been standing in line to actually see your home?
Right.
And there's no guarantee that they're not going to pull out and in a few days for some various reason. And they're like, oh, you're probably right. Like we tell them the truth, and then they make the decision from there. But but I mean, that's so enticing though. Like I can see as a seller, I can't blame a seller for wanting to take, I don't know, $100,000 cash over asking price. I'd be like, heck yeah, I'm gonna go buy me a nice car,
Yes. Yeah. The seller, like you said, it's enticing. And what a lot of people like in my brokerage will do, I got an offer from blah, blah, blah company. How did it work out for you? And then they'll get, the feedback. Oh, we closed fine. No, they came back and asked for $20,000 in repairs, because they'll send out during the due diligence period. They're going to send out an inspector. And typically, if you have old systems and that sort of thing, they're going to reduce that price, if not terminate altogether.
Yep. That's what they do, man. Especially if they're just trying to win the bid. And once they win it, they're like, then they try to hammer it to you. And like, then it looks like there's something wrong with the house. That's what I tell the sellers, right? Mm-hmm. So like they'll find something wrong with it. They'll cancel the contract. Now your house is back on the market. And other people that looked at it were like, why is it back on the market?
Why didn't they want it?
Why didn't they want it? What happened? There's just something wrong with the house, then you have the stigma on your home. But I still, and all in all though, I can't blame the sellers. It's too enticing.
And how much? Go ahead. I was saying anytime there's a cash offer accepted and we're aware of it, always we go in as a binding backup, because there's a strong chance that cash offer is going to terminate. So if if your offer didn't get accepted, I'm always coming back to that agent as a binding backup, especially if they chose a cash offer over my client's offer.
Some areas don't do that. Can you explain a binding backup?
Binding backups. Those have been like gold almost to me, because basically you're under contract, but you're in the second position. So if anything happens with that first contract, you don't have to renegotiate. You don't have to do anything. You're automatically the next, the binding contract. You don't have to.
Okay.
Yeah.
So do you have signed paperwork saying that you're the next one up?
Yes. Everybody signs. If that terminates, you're automatically, so no other negotiations. We don't have to come back to the table. They are bound to you at that price. They're bound to you at whatever the terms you agreed to, but you're in the second position, and it's their to that initial contract terminated.
It's called something else in every state. Like you might have it might be binding backup in Atlanta, but it's probably, we have all sorts of different names. Like every state's going to have something different, but you could explain to your agent what you want.
Yes.
And then, and see if that works out for you. But sometimes that's nerve wracking, because you're like, wait a minute, that could be nerve wracking for a buyer. Cause like, just to say you're the binding backup, right?
Yes.
And then another house comes on the market that you really like. How do you withdraw that binding backup?
You just terminate the first one. So you don't even put earnest money. So when I put in an offer, I put earnest money due after becoming primary, 3 days after becoming primary. Inspection due diligence period starts, 5 days after becoming. So you still get all of those things. But if you do find a house, you keep on looking for a house. And then if you do find one, you terminate your binding backup with that first. And in Georgia, at least, the seller can only have one binding backup. They can't have multiple binding backups by license law.
Oh, that's good. That's good. I do want to ask, how many houses would you say right now in the Atlanta market are investor buyers?
30%. They've had some articles out that 30% of the homes being bought in Atlanta are being bought by investors.
And that's like
That's huge.
all of the greater Atlanta area, or is it just the center of Atlanta? Like, is that
Metro Atlanta.
going
So
out
outside the suburbs, it's Atlanta plus
Roswell?
probably 7 to 8 counties that surround
Mhm.
Atlanta.
Okay, so like Norcross, Roswell,
Gwinnett, yeah, Gwinnett, Norcross would be Gwinnett, Fulton County, North Fulton County, South Fulton County, Cobb County, but all of them are in like that price range. I would say
Cherokee?
Cherokee County too, but I would say that's a
Wow.
little bit farther, but Cherokee is in the metro Atlanta area.
No, that didn't used to be.
Yeah, now it is. And
When I was in the high school, that was the sticks. You're like, "You
that's a
live in
good point.
Cherokee
It used to be
County?"
the six. Now that's a hot area. Everybody's moving to Cherokee County.
That is hysterical because
Yeah.
nobody lived out there. Like, when it was like you knew exactly where the line was. You're like, "Oh,
Nope.
look, it's Cherokee County because there's trees
Schools are
everywhere,"
generally
you
good
know?
out there. Home values are rising, but yeah, nobody wanted to go to Cherokee County. Now they're booming.
How funny is that? How funny is that? Well, if you have any questions, go ahead and put them in the chat right now. Uh, all right, question. Dr. Mellow Yellow. I wonder if they're related to Dr. Pepper.
Name.
Anyways, question. How often do you see clients choosing to buy an investment property while they themselves choose to rent? I've had that happen. I've had that happen. Have you seen it in your
Honestly, hardly ever. Because I feel like most savvy investors own their own home usually at some point, like one of the homes they own. So yeah, I would say that as that I see, but I do see people that have a primary residence and they're building or they're buying rental properties.
That is like, I think that's probably a Louisiana thing because
Yes.
I know lots of people that do this.
Okay.
So their first home they purchase, and then they're living in their parents' house while that house is being rented.
Rented.
You know, that yeah, they do this for a while. Like they'll
Yes.
do it until they're like
Until
in
they
their
have
mid
a rental
20s.
portfolio.
Well, no, just that first house is just the one they're gonna rent until, like, they've met their girlfriend or whatever, or their
Right.
wife or
Okay.
whatever. They spend
Gotcha.
all their time at their parents' house. They're renting the house that they
What
purchased,
they purchased.
and then they find their main squeeze, and they're like, "Oh, we could either continue to rent that, or we have enough money, you know, like, we have enough money for to continue to rent this, or we can move into it." And most of the time, they just keep that as a rental property, and then they
Right.
buy a house together. I love that for
Yeah.
them. That's I
I
don't know
think
if
it's
it's a
less
cultural
common.
thing.
I don't
Yeah,
know. I just feel like it's less common that they're so excited, especially home buyers to get their own house. They're not really thinking about the investment side of it up front. Like, oh, I'll just rent this house. I'll, buy it, I'll rent it and live at home. I think that's not as common.
and I even here too though, like if it's a young couple and each of them already have a home and they happen to be living in it, one of them will either A, move into the other person's house and rent that second one out, or they'll keep their 2 houses and buy another house together.
Right.
That's
I think
a
that's a
thing
smart
here.
idea.
I
I just
know.
don't think a lot of them are going into it with that plan in place. It's more
Oh, I
circumstantial.
think some of them are.
Yeah.
But in my area, they are.
In your area,
In my
right.
area. Yeah, that it's a thing here.
Yes.
Roche Granberry says, "What do you guys think about the pricing of new builds? What do you think of the pricing of new builds? What is your thought process on this?"
Oh, I think they're expensive to me. I think everything's relative, right? So I live in about a 4,200 square foot house. It's 7 bedrooms, and I bought it for 235 in 2016. And
Oh,
when I'm showing my clients these new construction properties, and they're like 1,700 square feet for 400,000, it's harder to swallow for me when I know like
uh-huh.
5 or 6 years ago what I was able to get for that. So I really, I tell and a lot of first time home buyers, they want new and they want nice and they want shiny, but I really try to get them to think about resales because they are
Mhm.
building much smaller, they're building much more expensive, and I think if you are going at least get more home for your money with a resale over a new build right now.
When it comes to me and new builds right now, I've said this in a video.
Mm-hmm.
If you were to ask me personally, would I build a brand new house from scratch? Like, would you do it?
Right.
And I say, I would rather have dull tooth hamsters with rabies chew up my eyeballs than to build a house right now. And I mean it. I mean it. There's no way. Their delays in building are so unpredictable. You know,
Right.
a home that you could pretty much count on, well, it will take 6 to 9 months, let's just say, to build. Now that's 12 to 18 to 24 months to get them built because there undeniably there is a lack of supplies to the builders. Not only is
Right.
there a lack of supplies to the builders, they don't have as many qualified tradesmen as they used to have to build these houses in the first place.
Right.
It is very, very, very difficult to get people to show up and show up on time. And it doesn't matter if they're building a brand new house or not. I mean, plumbers are the hardest thing in the world to find in my area.
Yes.
So I wouldn't do it. I just wouldn't do it. Now, if they had an existing home that was already built, it's in place, everything's all you have to do is sign the paperwork and wait the 30 days for it to be approved. Yeah, I would buy that brand new house. But if I was waiting for something to be built, absolutely not. Because like even at the beginning of the pandemic, these people sold their house because it sold really fast. They're waiting for their house to be built. They had negotiated the price, let's just say at 300,000, like you bought your house. And then once the house is complete, they were like, oh, this costs us a lot more. So now it's going to cost you 400,000. Well, they're only approved up to 375 and they don't have the extra $25,000. There's no way. No way.
A lot of uncertainty for buyers right now. They're going under contract until December. Who knows what interest rates are going to be in December? So either you're paying this exorbitant amount of like points to lock your rate, to extend your rate, these rate lock extensions you're paying. It's just so many things that are uncertain about, new construction at this time. So I agree. And the pricing is, when you go to I don't know if you have that same thing. I go to these neighborhoods and I'm like, how much is this house?
Yeah, I don't know if you guys have that in Atlanta. Like I know that some of the new builds like all over Arizona are you'll look at these neighborhoods, you're like, wow, these are really nice, but they're built to rent. So
yes.
So I didn't know if that's a thing in your area.
That is a thing. That is a thing, and that's not a good thing. So now different municipalities are barring those. So they are, and they'll, brand new construction, you would think that they're doing it for townhomes and for single family homes. The entire community is a rental community. And some cities have said they weren't going to approve those in their local cities anymore. There was enough homes for people that wanted to buy one. But yes, in Atlanta, they're becoming more and more common in Atlanta.
You wait until enough politicians' palms get greased and elections come around, and sure enough, you're going to see a lot more of those. Right. That's what always happens. Always happens. Maria D says, question. Can you talk about how to price a house to sell in this crazy market? It's tough to hit the moving target. What is your suggestions there?
I just think you go ahead and price it with the market for the most part. If you'll be surprised, it depends on your market and your price point, and price it market price, because a lot of people are still being like they're going to get what they got in the summer of last year, and I don't think that's the case. A lot of buyers are being a lot more cautious with these higher interest rates. So but I think a lot of sellers are like, I still want this. So I think price it with the market, but don't be surprised, because what elevated everybody's home price is that there were 20 offers or 21 a lot of offers on the house. I think there'll be a little bit less of that. Raises rates again and rates go up again, next week or this month. I just via the market and then see what happens, because the demand for your house will increase the price, but you don't want to overprice it in this high interest rate market.
That's exactly right. Price it with the market. Let the market dictate the price.
Yes,
so I know that sounds crazy. So like if you pull up comps, if your real estate agent pulls up comps and your comps say that your house is only $300,000, don't go crazy and go, well, I want to list it for 310 and hopefully there's a bidding war. Don't do that. Don't do that. Just list it at 300. If you have a hot house, trust me, you'll get more offers. If you have a hot house in a good neighborhood, you'll get plenty of offers. Will you get 60 offers like you did it last year at this time? Most likely not. But you still will get plenty of offers. Plenty.
Yeah, I don't think don't price it too high.
all of a sudden, I just recollected at this time last year, at this very time last year, they were talking about how the market had slowed down and that
Oh,
people were gonna, because they said that people were getting out more. They, some, I guess, because like some people had already been vaccinated and they were gonna start getting out more, and we're probably gonna see a slowdown in the market. Boy, were they wrong.
yeah, that did not
That just
that
hit
did
my
not
brain.
happen. Yeah, so I don't
That
know.
did not.
Don't quote me on this, but I feel like it has, because I know people that in certain price points were like, I had this pre-approval for, like you said, 375. Now I only can get approved for 325. It changes what they can afford. So it's gonna be less people, I think, that you'll have offers. But like you said, enough offers, if you price it right, they'll still come in above list price, because people are still like in that, especially if they've been looking for, some months. They're still in that frenzy a little bit of, bid higher, no closing costs, short due diligence, all of that stuff. They're still in that frenzy.
I worry though, because so many people have been priced out of the market. There are people that sat on the fence because they were a little concerned of what was happening with the pandemic. Understandably, they waited, and now they're sitting here, and now home prices are high and interest rates are high. So they were like, "Well, the interest rates are higher than they were, so the home prices are going to tank." And every month that goes by, I'm like, look, they're still not tanking. Your
Right.
prices are still not tanking. Like now you're going to pay even more than you could have 3 months ago. Now it's still, now you have to pay even more. And some of them are like, we got priced out. Like we can't do it because we are only qualified for this. And now the houses in this neighborhood are $25,000 more than they were 3 months ago. I can't do it. And that's my biggest concern. And
Right.
I don't, even if the interest rates go really high, I still don't think, with the lack of supply, that we're going to see the plunging of home prices that people keep predicting. I read it in my comment section every day. Oh, it's
Right.
going to crash. Home prices going to go down 40, 60, 100,000. Somebody actually even said they're going to be cut in half. I'm like, when in history
Right.
have home prices been cut in half?
Yeah, right.
I'm like, I can't, that doesn't,
Yeah.
the math ain't mathing right there.
I don't see it happening, particularly they keep on talking about the Sun Belt, the Sun Belt. People are leaving there. I think two things people have to realize. A lot of people are leaving their northern place, wherever they're in the north or, California, like expensive places, and they're moving to less expensive, Atlanta, for example. And they're like, oh, I just sold my house in Seattle for 800,000. There's no problem for them to buy a house here for 500,000. Even if like the
Exactly.
local Atlanta person was like, oh, I can't afford 500,000. So, that movement that's being allowed right now, talking about the great reset, people can live, people in certain fields can live wherever they want. And they're taking that, whatever their higher salary that some local Atlanta people can't compete with, and they're competing with you now. So you're not competing with another Atlanta, buyer. You're competing with somebody who has more buying power than you. So, that's a big thing right now.
So it isn't just corporations, it's
No,
people
no,
that with the deep pockets.
it is.
I've forgotten about Californians because that's what happened in the Austin market. The
Awesome.
Austin
Yeah, people are
market
moving,
blew up.
and they have more money than you. And they, like Airbnb just announced all of their people can live wherever they want. You don't have to come in the office. We're done. Everything's remote from now on. How many of those people, if corporations go that way, they're not going to go to the most expensive places. You're going to go places where you get the most bang for your buck. And a lot of
Mhm.
those people in tech make a lot more money than, especially service jobs and that sort of thing. I remember getting homes for people that worked at hotels that didn't even make a lot of money. They could afford a house in Atlanta. That's not the case. Like service workers, generally, they're not going to be able to afford a house in Atlanta anymore. And
Mhm.
that is a concern. And that's why, on my channel, I did like, what else can you do? And people were like, oh my goodness, you want me to move to the country? You want me to do this? I said, if you wait too long, you'll be permanently priced out of anything. And you'll be not, and you can't afford rent either. So you're gonna have to move back home with your parents, or like, what's the next thing,
When
because
I lived in Orlando, that was I had the best paying job. My husband did too. We had an apartment and we were able to buy a house, like in Orlando. Was it anything great? No, it was 1,500 square feet, but we were able to purchase a house. People working my job now, making the money that you would make at
right.
that job. And my husband's, there's no way. There's no
No.
way. And even the rents are super high. And they're like, I don't know what to do. I'm like, And people make fun of people like, oh, well, they're living with their parents. Well, where do you want them to go? Because they gotta work. They got nowhere to live.
And a single woman. Like I remember finding a house for a single woman who worked as a server, like a banquet server at a local hotel. So not even like a full-time kind of job. But we were able to get her a new house at that salary. I think those days might be gone at this point.
It's terrible. Cynthia Mankin says, question, if you were selling a house that has water table issues in the basement, would you fix the issue before selling, or would you sell the house with cost of repair tacked on it? I have a suggestion. You put your 2 cents in, but
mine is definitely fixed. Mine is fixed.
And I'm the opposite.
But the cost of the offers that are going to come in with that issue is probably gonna, they're probably gonna lowball you a lot. If you can afford to fix it, go ahead and fix it.
And I say the opposite. And the reason being is, I'm going to tell you why. Because the thing is if you get it fixed and there's a problem with that repair, those people will be hanging on to you like static. They will constantly be harassing you because it wasn't done to the way that was supposed to be done. And they're going to be like, where's the receipt? And when did you talk to them? And they're going to want this whole call log of crap that needs to be done to their basement because it's not done correctly. Or if it's only if the repair works for 11 months and 20 days and it isn't repaired, like it didn't work to the all the way to the full year, for the warranty, oh, they're gonna be all over your rear end. Like they're like flies on poop. I don't know. Take the money, run. The house is
whatever you can get for it, because you will have people are going to lowball you because you have to disclose that to whatever the buyer is going to be, and a lot of people aren't going to even consider it.
But price it for the market with the repair.
Price it for the market with the water table issues.
Right. So if the house was at $300,000 and the repair, let's just say, is $8,000, put it under $8,000 and say this is the reason why it's under the cost because of this. You put it in the seller's. That's what I do. I wouldn't write it in the description, but I definitely put it in the realtor notes.
Right. You wonder why people are like buyers ask me, why is this house coming on the market 10 times? I'm like, they found more than likely some kind of inspection issue that they don't want to deal with.
We got a super chat. Long story short, $5 super chat. I super chat a month ago. Oh, well, you're super chatting today too. Thank you.
Right.
When are people going to buy in Detroit of the USA? Any updates on that question? I don't have any updates on that question. I don't. Detroit is one of those crazy markets. They have pockets that have come back, but then they have pockets that are like, should you buy in Detroit in 2020? Well, it's 2022, Eddie.
I think a lot of investors are buying and holding in those markets. I don't know if they're
I'll tell you,
necessarily.
I don't know if you're like the ones that I've seen like recently, like my investors.
Yes.
Arkansas, Kansas City, Missouri, and Tennessee. Those areas. Those are
the areas I want to go to.
Yeah, and they've taken them out of markets like Atlanta, Austin, Texas, San Antonio, Phoenix, Arizona, because they feel like they have capped out what they need to get if they're from there, and they're ready to move somewhere else that's going to continue to grow, which I thought was really interesting because I'm like, Kansas City, Missouri, right. like
where are people going?
Yeah, I wish I knew more about that. I'm sorry. I'm really sorry about that. I just don't. You know what? I should probably just have somebody. Do you know any real estate agents in Detroit?
Not really, not a strong connection in Detroit, but I do know, like I said, if people are buying things there, generally they're buying them and just holding on to them.
Okay.
But I don't think I think that not that it's been missed, but the low prices, like right after the recession, like they were $5,000. They were giving away those houses. That's not happening. Yeah. A lot of people are going to Baltimore to buy properties similar to the way Detroit was. They're more expensive, but a lot of people are going to Baltimore right now.
I have to tell you though, Detroit's houses that like you would say, oh, I bought this house for $15. You're walking up to, you're like, oh, it looks like the horror house. But then you go inside and you're like, these are stunning. Like, oh my gosh. And I love when they restore them back to their original glory. That's like so beautiful. No excuse drummer says, question, how often have you seen Zennials and Millennials unable to purchase a home based off debt to income ratio? That happens every day.
Yeah, it does. It does. Yeah, I say get out of college, wait a little while longer before you purchase a car, because they'll get like this really expensive car and then they want a house, and that debt to income ratio is hurt there. Student loans have gotten better with all loan types as far as, what they're counting. There are a lot more income-based repayment plan options. So I think millennials are still able to buy homes, and I feel like millennials make a lot more. Some millennials make their incomes are much higher than in some fields, and they're able to kind of offset some of the debt that they have if they're doing like income-based repayments and they don't have like huge car payments and that sort of thing.
Millennials in my market, they're older when they're bought their first home, but their first home that they're buying is not what I would consider a starter home. Yeah. You got to remember, millennials, like people think of millennials as kids getting out of college. These people are in their 40s.
Yeah, they are. Stuff. Yeah, they're older. They're older, and they're like, and they've waited a long time. And sometimes they don't have kids. Like they want a house for maybe their girlfriend or whatever, and their dog. Like they, they're a little bit more flexible as to what, and they're buying, like you said, higher price homes.
Yep. Well, this is interesting. Tens graphic says, how has Cali home prices dropped since so many people are moving out of California? If prices have not dropped, what are some of the reasons you think that prices are still high? Some areas of California have just recently started seeing some declines in home prices, where they've seen home price reductions once they've hit the market, because they're so used to having their house sell within the first 24 hours. To see a house on the market for more than 5 days, it makes them nervous, so they're willing to take a price cut. I don't know if that's significant enough to say that like all these people, I wouldn't say, this is the thing. Everybody says, oh, there's this mass exodus of people leaving California. Yes, that is true. But a lot of the mass exodus of people leaving California is they're keeping their houses in California and they're just buying another house somewhere else. There's lots of people that have multiple houses just for themselves because they can. Right. Another thing is that I think it's been the news of people from California leaving has been more sensationalized than what it actually has been like in reality, because there's so many people that really want a house. But yes, they say that that there has been a reduction here. Eddie is so good at this. Thank you, Eduardo. The California housing market continues to perform as well as buyers enter the market anticipation of rising mortgage rates. The market sizzled last year as to break all records. It was a hot seller's real estate market, according to Zillow's at the state level. California's housing market remains the most valuable in the country, with the total of $9.24 trillion as of late December, accounting for more than a fifth of the 21% of the national total. However, California's overall value of $1.38 trillion in 2021 only represents 20% of the overall national value of the $6.9 trillion, somewhat underperforming by the negative 5.5% relative to the total weight, particularly given the extreme growth seen in other states. While January 2020 marked the first time since July of 2020 that the state's median price did not increase by double digits on the annual basis, the statewide median price is expected to hedge higher than in the coming months as the market enters into the spring home buying season. I can't see that people in California wouldn't continue to buy. I mean, like, will they take some price reductions? Probably. Are they going to see as many people barreling down their door? Probably. You don't see as many investor buyers as like you would in the Sunbelt area, because those homes are not really exactly like the cheapest. Don't get me wrong, investors still buy in California. They buy them, they flip them, they rent them. I'm not saying that. I'm just saying you don't see the magnitude like you would in Shahidah's area of Atlanta. So Sheheedah, I can't say your name.
It's okay.
That's terrible though. That's like an awful, like, I mean, like I'm an idiot. Like I can't do it. I don't know what's wrong with me. I'm stupid. Debbie Brady says, your dreams coach says, question, with a new increase in mortgage prices, do you think this will flatten this crazy real estate market? Currently, no. I don't know. You give your opinion.
Yeah, I think into the spring, when you say flatten, I think it's going to be easier for people that are able to afford this new mortgage payment. It's going to be easier for them to get a house because there'll be less competition, but there'll still be competition, so it's pretty much going to be a competitive market, but not, I would say some homes may get 2 or 3 offers instead of 20 offers. I think that's what you're looking at, especially, it depends on your price point. In the luxury market, you might have a better, chance at it. But in like the basic middle class market, it's still going to be competitive, just not as competitive.
Right.
So yeah, I think it's because a lot of people,
sellers will,
go ahead.
Go ahead.
I was saying a lot of people don't want to put their houses on the market. Like people are not going to sell. Like they have to have a strong incentive to sell. The people that my clients have bought recently, they were retiring and moving. They were getting a divorce. There has to be a reason at this point why you would leave your 2% interest rate, your 3% interest rate, and go buy at a higher interest rate right now. Like, so it has to be almost situational why somebody, at least resale, would put their house on the market. So it's going to be fewer people that are willing to put their house on the market because they have to think strongly, like, where am I going? And, what am I going to pay when I sell my house? I can make a lot of money, like $300,000, off my house, but I know I'm going to pay a lot more for the house that I'm buying next.
The other thing is that, Eddie, put that question back up because I lost my train of thought and I have to get it back. The other thing too is that people don't consider the fact that whenever you're moving to a new place, like she said, the prices of the new place may be the same. And even though you want like these flat out prices, they're still gonna be paying more in interest. So even if the prices, let's just put it this way, even if the prices dropped some, with that increase in interest rate, that they're not winning. They're not gonna win. And like some people don't have a choice. I do believe though, some sellers are going to be a little bit more flexible than they had been last year. Last year, they were absolutely ridiculous. They were like, do you want to give us your firstborn? We really like your puppy. Like they were like, sellers were kind of like rude, like, you want our house? You're going to like give us the sun, moon, and stars. I think we're going to see a lot less of that nonsense, which is a good thing. I'm not saying all sellers did that, but there were some that were.
There was an arrogance. There was an arrogance to sellers. There was arrogance to real estate agent, listing agents had a certain arrogance. They weren't returning calls, that sort of thing. So yeah, it's going to humble some people in this market a little bit.
That was a problem prior to the pandemic, though. I mean, like there's like if we're gonna be
everybody back,
and I love the ones that never answer their call. This is what they do to us, right? As other real estate agents, they immediately send you the voicemail. Yes. But, like they want you to hear their voicemail. They're like, if you want to get a hold of me, you can text me. And you're like, really?
I was calling
you. Shannon.
Or my
just
or my office hours are from 6 or 9 a.m. to 2 p.m. If you call me after that, I'll talk to you tomorrow.
Like I only take voice calls between, oh my gosh, you're not that important. You only sold 10 houses last year. Pick up the phone, Sharon.
Right. Pick up the phone. Yeah, it's gonna humble a little bit. I think it'll be easier for you to find a house, but it'll be more expensive too. So it'll be easier but more expensive.
Yep. Killian one says, question, if a person's home has a huge fire while they're fixing it up for selling, what are your suggestions? I have a suggestion on this. Do you want to go first?
I don't know. Do you have the insurance? You should have like contractor's insurance, I would hope. So that would be my suggestion. Call your insurance company.
Don't put it up for sale until that thing is like fixed to the nines. And of course you have to disclose all of that. Right. But I would also do this to reassure the people that are purchasing your house. In every stage of that house where it was repaired, right? So I would show it at its worst, like its very worst, then show every step of the way to the possible new buyers of what you did to repair it. So like this wall was burned, then they removed this wall, then they, put in the spray, then they cleaned out the air conditioning units, then they put it like ozone layer. Like I would document that whole timeline of how these things was put back together to make it look brand new again. So those people feel secure when they're purchasing a home that had a huge fire. That's what I would do.
Right. Blackrock will buy it.
Well, I mean, here, we don't have fires here. We have floods here, and it's very common. So the people that are like, ooh, I don't know if I want to live there. That house flooded. I'm like, it flooded one time in 100 years. But the sellers that have had those documentations and timelines of how they treated it, how they've tested it, how it's been maintained, all their things that they did to it, those houses sell in a snap.
Right.
They don't have, because of the fact that they did their homework prior to selling it. So, yeah. 30-day review says, hey, I have a question. Have either you worked with people with SSDI, and what issues do you see with them buying? What do you think would help them buy a house?
I have. It's just income. I mean, simple kind of income. Usually disability is social security disability isn't a lot of money. So they have to be able to afford, especially in like the Atlanta market, if average homes are in the high 300s and you're making a certain amount, able to afford that price point. So they either have to move farther out, they have to have a cosigner. It's very not very common that somebody that's their only income, they're able to buy a house, at least in our market. They have to have at least a cosign or some other income that's coming in where they're able to afford to do that. I have done videos on USDA Direct, where they will pay some of your mortgage. They subsidize your mortgage in rural communities. Some people have done that. But again, that's still competitive as well. So you just have to, look for certain options, but you're probably going to move farther and farther away from the city.
Yeah, I love a rural development loan. They're fantastic. I live out in the sticks. I mean,
Yes.
there's goats and cattle like outside my neighborhood. Like you can go
Yes.
see them, and so we use them often. But yeah, that's exactly the same thing. Like, yeah, sure, you can be on Social Security that you buy a house. That doesn't matter. But it's your income, and your income doesn't match how much houses are in the area. So a lot of times you have to have a cosigner.
And the less expensive. Let me say one thing, sir. The less expensive I've heard somebody's mortgage payment being on USDA Direct is like $250. But I think it was like in the country, yeah. So it's possible, but you have to, like you said, move. You get an affordable place, get on something along those lines like USDA, and be willing to move.
Look at this. Another $10 super chat, man. Thank you so much. Tens of Graphics says, thoughts on counties such as Sheheedah, Kansas, voting to ban co-living rentals. I think it's salt in the wound to do this, considering that a single individual in Sheheedah makes about $42,000 versus 1,500 a month. That is awful.
Yeah,
my thoughts is that it's terrible. We cannot treat people terribly because they don't make $100,000 a year.
Right.
Like, I don't understand what happened over the course of the last 10 years that we have to vilify people that are not making exorbitant amounts of money.
Yeah.
So it's like, oh, we're going to ban this and we're going to make sure you can't have this. Like, why are you trying to kick these people in the teeth all the time? I mean, like we pay so much in medical bills. We pay so much in loans. We have to pay for gas. We have to pay for all this stuff. And now we're going to just make it so you can't even live. Like that's awful.
Are they saying that you can't have a roommate? Is that what they're saying?
Yeah. Like catch me.
Yeah. I've never, I would think that's crazy because I mean, even when I bought my first house and I was by myself, my mortgage was $880. I'm not a millennial. And so it was a while ago, but I got a roommate and she was paying $400. Like she was paying half of my mortgage because I had space for it. And I don't understand why they would, ban that.
I would ask like, catch me.
Yeah.
That's what I would say. Catch me. Like, how are you gonna I'd be like, this is my girlfriend. That we're together.
We are married, yes.
Yeah, we're now officially married. That's it. Like who are they to say? Like, my God. People are up in people's business too much.
Too much. Like, there's gotta be a way around that. Unless they're talking about like Airbnb kind of rentals, like where you rent out a room or something.
But you know what? That's another corporate buyer that like has killed it for first-time home buyers.
Yes.
Like here in New Orleans, they banned Airbnbs. You can't have anymore. You can be grandfathered in, but you cannot have them again. And if you try to sell your house, and you can't sell it as an Airbnb, that's it. It's
it. Okay.
You're the only owner because the hotel industry was like,
Yeah, the city of Atlanta is doing something similar to try to get rid of some of them.
Yeah, it's kind of a problem. All right, here we go. Question: do you guys feel that New York City and Toronto people raise home prices from the current 200K in Buffalo? I'm in New York City now and own two in Buffalo, but not. But locals cannot. Interest rate killed purchasing power. Well, I mean, just like anything, just like California, like if you move from Canada to Boston, for instance, which is very
Right.
common,
Mhm.
that it's just like from people from moving from California to Texas. They have the money, so they spend it. It's like funny money to them. It doesn't mean anything because it's like, well, if I was to buy that same exact house, it would cost me triple the amount. I don't mind, and they'll just throw it at it.
Yeah. Yeah. What COVID did for most people was like, oh, I could do this at home, because a lot of times, a lot of corporate, companies did not want to do remote work because they thought the productivity was going to go down so much by having people at home. And I think that didn't prove to be true during COVID.
Nope.
And so they were like they were more productive because now I could pick up my children, I could do this, I could do that. And I'm proved to be true. Plus, the price of their real estate went up, to have these buildings and all this corporate space. So, yeah, I think that's going to be more and more of the case, that people are moving out of main cities a lot and then trying to get out to some of these rural areas, making it more expensive for the rural people that live there already. Even in taxes, we haven't talked about that. Taxes are going up this year. So taxes
I know. Property taxes
are going to be expensive, more expensive.
If you're not homesteaded and you've lived
Yes.
in that house and that's your only primary residence, go and get your house homesteaded like soon as you're done here. I want you to fill out the paperwork online and get yourself homesteaded.
Yeah, senior exemptions, veteran exemptions, whatever you qualify for, make sure you're getting that.
Yeah, go up to your tax assessor's office, go be friends with the lady behind the desk and see all the things you can qualify so you can get your property taxes decreased. But I do want to say something real quick before I get to this next question. Yeah. Buffalo, New York is cold and it snows a lot. The weather is super crazy. Like
that's why they're coming to the Sun Belt.
I would not know why they would go there. Like if I was a Canadian, I'd be like, I think I want to go to Buffalo. It's like Buffalo is like American Canada with crime.
Right.
I don't know. I would do it. Miss Shadow Llama. Okay. What price point or size do you consider a starter home versus a luxury home in our markets? Okay, I was going to say, because that's going to be different in every single area. What would you consider a starter home price in the greater Atlanta area?
Yeah, prior to COVID, I would have said 200 to 250, or even maybe 175 to 250. Now I would say 350 to 400,000 would be a starter home.
Right. Yeah, and my price point, a starter home would have been anything from like the 180s to about the 230s, and then now that's like 280s. I mean, it's like 380s. It just depends. Like the amount of buyers that I would consider first time home buyers and never bought a home before are much older and they're buying their first home. But luxury market here, I mean, luxury is anything over 600,000 because we don't have the homes in like the multi-millions. I think there's like 5 in my whole entire county. Like I live in the sticks.
Sticks. Yeah. I would say above 500,000 or so, 500, 550 would be considered luxury. But like we have some $1 million homes, but they're not. Like I'm 30 minutes away from Atlanta. So, but in Metro Atlanta, maybe 700,000 is luxury. 700,000 and up.
Yeah, 600 here. And like I wouldn't even like, what's so weird about luxury homes? I find this to be the strangest thing. I walk in these houses and I'm like, okay, this is 650,000. It's just a bigger version of the house I already have now. Like I don't get why this is luxury. Like they have no better appliances, their cabinets. Yeah, that maybe they have more cabinets, and they have more floor space, but I don't I have crown molding. I have all of their features that they have in that $650,000 house, but I just don't have the size. Whatever. I don't care. Like I don't need all that. I'm totally fine. That's what I told my husband. I'm like, I think we're gonna be living here until the day we die.
I said it'd probably be a rental. I wouldn't sell this house. I don't think we would, because they don't build it like this anymore for the most part. So yeah, we probably would hold on to it even if we moved.
Until it gets too much to clean.
Yeah. Either one.
I don't know. You have kids?
Yes, I have 2. Right. Those are my little cleaners.
No, I don't have cleaners. I have destroyers. I
Right.
have like I have my husband, this is no joke, totally off topic. I'm sorry, but I have to go here.
Yeah.
My kids left for 4 days. And then I had a little host with me that would come to my house every single Sunday.
Right.
This one Sunday she came in and like for 4 days my house was spotless. She walked in and she goes, "Wow, your house is like really clean." And I'm like,
Everybody's
because
gone.
that's because I have no kids here. Like I'm not having
Right.
to pick up on them. My kid, they come off like as soon as they walk in the door, they're taking off stuff and they're just putting it everywhere, over the chair, on the tables, on the counters. We have piles of stuff everywhere.
Right.
Oh my gosh, kids suck. They're cute, but they suck.
Yeah. The more space, the more you have to clean.
Yeah. Serenity Co says the majority were blind to the blank shenanigans. Oh my gosh. Let's try this one more time.
Okay.
The majority were blind to the bank shenanigans of '08 crash. Correct. The Fed, FCC, Treasury. What bank gambling is happening now? Who's investing this? What will the next Big Short be? What do you think? Will it be the Big Short 2?
Yeah, I'm not sure. I think we have way more information than we had in 2008. Like everything, in the media is out, like Twitter, all the information is kind of more at our fingertips than it was before. So I don't know if it's like the Great Reset is, I think the COVID kind of spurred everybody to be more technological.
I'm going to tell you my opinion on this. Serenity Cow. I'm going to tell you my opinion. This is what I think is going to happen if we have a financial collapse, since major corporations that have been monopolizing the most affordable homes in the United States. If companies like Blackstone, Blackrock, Vanguard get into a financial pickle, they have so many properties on their books that would cause the next Big Short, in my opinion, when it comes to housing prices, because they would have to get rid of their properties. If the federal government doesn't bail them out, which we always end up doing, that would cause the next crash, unless it's some other financial disaster. I just can't see them tanking the way that people are predicting. I just can't see it happening. I don't know what would cause it. I mean, of course, rates are going to go up, but we don't have enough supply of homes. And even home builders right now have flat out said, well, the thing is interest rates are going up. There's no really incentive for us to build right now. I know we need the houses, but I'm not going to be held left, holding the bag when, if people just stop buying houses. So, I'm just going to sit with this one out.
Yeah.
Can't really blame them, but that will cause more of a problem of the shortage of houses that we need on the market. If you just Google homes being built in the last 10 years, you can see like the graph goes like this and it goes like all the way down. Like they're not building because they don't want to be held with a bunch of vacant properties that they have to sell at a discount. Can't blame them. Sucks, but because we need them. But yeah, that's the answer to that question, Eddie. Eddie's going to pull up the next question. He's so good. So good. Dee Dee said, Dee Dee, question, are any of you seeing racial issues against African Americans in this market, like AA homes getting lowballed appraisals or AA homes not getting offers accepted? What are AA homes?
African American.
Oh, okay.
Yeah. I'll take this question. Atlanta is a diverse market, so I think it happens less here because anybody can buy your house, but we have neighborhoods that are less diverse. And so it's very hard to prove whether somebody has lowballed your or didn't accept your offer because of that in general. Mm-hmm. But I think if appraisers are being honest, and some of them are, there is some bias in appraisals. We've had a lot of stories about that in the news, that appraisers are biased because appraisers, if they're the predominantly African American community, then that appraiser more than likely is not as familiar with that community a lot of the times. And that's why it's important. If I'm listing a house, I'm always going to give them a packet of information. I'm pulling the comps, I'm giving them the comps. So to make it more likely that's going to appraise, for the price, the sales price. But there is, I think, bias, and I think it's been documented in stories. I had one appraiser say this, had another appraiser come back, and I kind of, didn't show anything. And I always could tell sometimes, and this is something in real estate, we say, make sure your house is neutral. That you not have like family pictures up and that sort of thing. But I think in African-American households, done even more. When you're going to show property, you're like, there's no pictures of the family anywhere. And I'm like, okay, so it's a little bit more neutral in African-American households when they have their house on the market. And that's just the case because they want to avoid any bias in the pricing of their home.
Yeah, negotiation wise too. Well, you got to prep it ahead of time. That was a big story though. And like there were several families that did this like test, like our appraisal came in like 40,000 lower than the rest of the neighborhood. Like, what was it? And so they were like, is it because, we're African-American? Let's try it one more time. And then they had the neighbor across the street who was white go into the house and meet the appraiser to open the door up and everything. And then sure enough, miraculously it went up 45. It went up like $55,000. And it was like, how did I get $15,000 extra just because I'm white? I do like, there's always bad seeds that ruin the bunch. There's always in every industry. So, but selling your house and making it neutral it doesn't matter if you're African American.
I think it's a case for everybody, but I think African American buyers are more sensitive to it. They're definitely more sensitive to the. So reduce my home value if I leave my family pictures up, that sort of thing.
Right, but I'm going to tell you, like here in Louisiana, like carcasses. I always say, can you take the carcasses and put them somewhere else? Because the people love to hunt. And they're like, oh, people around here don't mind. I'm like, there's lots of people that live here that do not mind. But we have a huge amount of people that come in from other states. And when they see your dead carcass hanging on the wall all the way down, like everybody's, family tree of carcasses, like nobody wants to see that, take them down. And they're like, okay. Some of the times they won't though. They're like, no, they don't want to buy my house. That's fine. But some of them are like, whatever. So, all right, next question. All right, so Renika, who do you follow to get your market information? What do you read? What podcasts? Oh my gosh, I'm all over the place.
Yeah,
I listen. I read the headlines every single day when it comes to real estate. And I don't have one specific source that I always follow. I literally type in the top of Google because I don't care who it comes from because I want to hear all the sides. I want to hear all the sides. I'll type at the top, like housing bubble, United States. Then I'll, hit the news and see what the news articles that have come up. I read them all. I'll read the first page of Google and sometimes into the second page, sometimes into the third if they're interesting enough. And then I do the same thing with housing crash. I do the same thing with housing market updates. That's how I know what's going on all over the country. Because if I limited myself to one specific podcast or one specific news source, then I wouldn't get everything that I need to know, a general feeling of what's going around the country.
I think I'm the same. I pull from a lot of different places especially when I'm doing my videos as to like, what's happening in general. I also am a member of a lot of real estate Facebook groups. And so if it's happening, sometimes your boots on the ground is a little bit more accurate because a lot of the data that you see is laggard, like it's behind. So like NAR might come, National Association of Realtors will come out with their March data like now or something, right? But then real estate agents will tell you, oh, I'm only getting 2 offers on my, my property, or, I'm paying closing costs now, or I'm getting my offers accepted because when I put in closing costs, or they're accepting VA offers now, that sort of thing. You're finding out in real time. So I like being, members of a lot of Facebook groups to find out, because I know recently a lot of people are getting their FHA offers accepted in Atlanta. More people are getting their VA offers in Atlanta, and that wasn't the case last summer. So it is kind of changing. Boots on the ground is kind of changing, and people are more successful now. Not always, it's still competitive, but it was like you couldn't pay somebody to take your FHA offer last summer.
I was just thinking about who my favorites are, because it was kind of like, ooh, what are my favorites? But now that I'm thinking about it, I do like Housing Wire a lot. I will read that. I like the AP, and I like looking at Reuters. I'll occasionally look at the New York Times, occasionally, and some of the other ones. But I mean, I don't have a specific preference. My favorite podcasts as real estate agents, like I don't know if you've ever listened to the Bearded Men of Real Estate. They're for real estate agents, but it's
Okay.
us discussing. It's real estate agents, two guys.
Right.
They're just discussing real estate topics, and they have beards and goof off. The
Okay.
first like 15 minutes of their podcast, really, you could just scrap it, just go all the way to get to the stories because
Right.
they're just blah, 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 blah. But yeah, I like them a lot because they really do have their finger on the pulse of what's going on,
Right.
especially with the National Association of Realtors.
Right.
So that's where like us as real estate agents are like having our own discussions. I don't know if it would be interesting to you guys in the audience, but it's interesting to hear because there's all sorts of lawsuits that come out from specific things, code of ethics violations that come out from things. That's what the kind of stuff they talk about. I listen, every Wednesday, Biederman Real Estate.
I think I think people will be surprised, especially like the general public, like what goes behind the scenes or like real estate discussions, look at this offer that came in and why would that, those kind of things get discussed in real time.
Right. Exactly. I do like me some Facebook, but I don't like go on Facebook to have discussions on Facebook.
Right.
I only go to the real estate groups.
Right.
And like I have a group on there and that's it.
Mm-hmm.
Oh, you're in my group. You're in my group.
Yeah. So I listen on what's happening in your market, or I'm in like smaller groups that are just like agents trying to like, get their offers accepted. And what are y'all doing? What's happening here? So you'll be able to find out a little bit more.
Yes, exactly. All right. We got another question, Eduardo, the producer extraordinaire. He's so good. Number one, one lost dude. Aw, I'm sorry. The question: have you heard about the HVAC unit shortages and that 1-year wait list to receive the units? I have heard wait lists on just about everything. At one point, it was roofing nails of all things. Why should you wait to replace your air conditioning or furnace in 2022? Oh, Eddie, you're so good at this. Man, he pulls up some stuff. Okay, here we are. All right. Why is there an HVAC product shortage? Common HVAC systems like furnaces, air conditioning units are complex pieces of technology. Usually, this is a great thing for homeowners as it means they're more convenient in heating and cooling. But recent hiccups in the supply chain impacts how quickly these products can be manufactured and shipped. There are several reasons why your new air conditioner or furnace will be taking longer, including COVID-19 precautions. Do we have those anymore? I thought we put those away. I thought those were put to bed. Anyways, as workers continue to navigate the COVID-19, taking sick days and other safety precautions have somewhat contributed to the backlog. Okay. From previously. A couple extra days every now and then accumulates over time. Supply chain issues. International supply chains are designed for optimal efficiency and can take a while to correct themselves when consumer demand or the ability of materials shift. While companies find alternatives to help catch up, existing backlogs continue to make steady if slow progress. Higher cost of raw materials like steel, metal, copper, and vital for modern HVAC equipment. It is important materials that include plastics, even finished electronics like microchips and semiconductors. These two components are particularly scarce. We need to make more stuff in the United States. Like we used to make lots of stuff. This is a hose. Worker shortage. As industries wind back up, they're facing a shortage of workers compared to the spike in demand. Professional HVAC technicians also time to train to make sure they provide reliable, efficient services. Oh, I have a novel idea for all of this. Why don't we go back to making stuff like we used to make stuff, like we were the people, the stuff makers, right?
Right.
We had a lot of people that were making stuff, all of these components and everything else. Why don't we pay fair wages to people that are working at these places to make the stuff for Americans? And then we wouldn't have to depend on so many things outside. Like I remember years ago, and I never understood what the big deal was, but there was this thing called NAFTA that came out, and it was like, oh, we're going to be trading with lots more people, lots of other places. And my parents were like, this is a terrible idea. I'm like, why would it be terrible for us to pay less for the goods that we need? Like, that doesn't seem like a terrible idea. As an adult, that finally makes sense to me why that was a really stupid idea. Because a lot of those plants that were making that stuff before NAFTA are now extinct. They don't exist. Some towns have completely died because they don't make those things anymore. And I mean, Detroit, Michigan is
more of a national security issue. So I think people, hopefully, they'll start, things are made in America, just for national
The
security
innovators.
purposes.
Yeah, and we're the innovators. Like, we make the stuff, we design the stuff, we put it, like, we're the ones who invent crap, and then they're the ones who end up making it cheaper somewhere else, and then we buy their cheaper stuff that we invented here. Stop it. We need to stop it. We need to stop it. So Joanna says, my mother-in-law sold her house, and a friend is talking to her about getting a revised mortgage to have her to have more buying power, to have
probably a reverse mortgage. She's probably trying to say.
One for her and one for the rent. Your thoughts? I would talk to a financial advisor. I would tell your mother-in-law to talk to a financial advisor and ask if that is the right thing to do. Do not let a mortgage person talk you into that. Don't let a real estate person talk your mother-in-law into that. Talk to your financial advisor and see what they have to say. And look at the terms of that loan that they're saying that you could do that with. I would be very careful with that and go over that with your financial advisor as well. Do you concur?
I concur. Sorry. I do concur. That's a good idea, because reverse mortgages are very tricky. Sometimes it makes sense, but a lot of times it doesn't. So yeah, you need somebody else to look at that for you. That doesn't have their commission involved or any money involved.
I have heard, like, some people say the reverse mortgage, it's probably a 50-50 split.
Right.
Some people say reverse mortgage, hey, it really helped out my mother, at the last years of her life. I'm like, fantastic. Then you hear other people that are like, oh, after my father passed away, that reverse mortgage became a real nightmare. And I'm like,
right. And a lot of older people get it without talking to their family ahead of time. And so they're
or a financial advisor.
So a lot of times they're surprised that they even have a reverse mortgage, but there's a lot of pride as you get older, especially like with your children and that sort of thing. You're having financial issues and that sort of thing. So that sounds good, you do it, but it's not the best thing for you to do.
If you have to, I get it.
Yes.
Like, if it's the choice of, like, not buying medicine, and like, I get it. But if you can avoid doing it, avoid it. Not financial advice. Talk to your financial advisor. I didn't know that the seller could raise the price of new construction while you're under contract. Yes, they can. We have been under contract for a new build for 15 months. Now they added a 20,000 to the contract. This is a thing, because builder contracts are not the state contracts, right? So the builder contract, well, we'll just say this is builder contract, right? Builder contract is here, right? And they're like, fill this all out, right? So as real estate agents, we fill them out. But by law, we have to fill out the state contract as well. So we turn that back in to the builders. We say, okay, here's all of your stuff signed, and here's the state contract as well. And do you know what they do with that state contract? They go, stick it right in the trash. They don't even look at it. They don't sign it. They don't do anything. They're only bound to the contract that they sign, which is their specific contracts. Not one of them, I don't know how it is in your area, but not one of them in our area uses the state contract. They only have their contract, and their contracts are like 45 pages long. And the whole thing, I'll break it down for you what it says. There is not a thing they can't do to you. You're protected on nothing. They either you want the house or you don't, period. That's what that contract says.
This is heartbreaking in Atlanta. It happens. It happens, and it happened a lot. Over the last 2 years specifically. And they tell you, they'll give you a chance. Like, you have the right kind of first refusal. Right now you're under contract for $300,000. We're going to sell it for $400,000. We can sell it to you for the $400,000, but most people don't qualify for the higher amount. Or we'll put it back on the market. We'll terminate. We'll give you your full earnest money back. But a lot of these people have been waiting 6 months, 9 months for this house, thinking, okay, I found a house in my price range. It's going to be great. Just to find out that they are going to be, their contract terminated. Is really very little to do, because the contracts in Atlanta or in Georgia.
Oh no, she froze.
You don't have to do both. Sorry about cut out. In Georgia, you don't have to do both. You can just do the new construction contract, and they're very much written in favor of the builder, 100%. So they have a lot of outs where you don't have a lot of outs in those contracts.
Nope. I hate builder contracts.
So if you're under contract right now, I would say read your contract very thoroughly and see where those things are. Can they cancel your contract? and be aware of that if you're at risk of that happening to you. Hi, Sir Ashley.
I was gonna say you've had Sir Ashley on your channel.
Yeah, I've had Sir Ashley on my show too. He's so calm.
He has the coolest name ever. Smart,
yes,
smart
I know.
dude I probably ever had on my channel.
Yeah,
I really enjoy him. I like knocking him off as like because he's always so calm and everything. And
right, he's very calm. I feel like I'm here, he's here. I gotta bring it down and mellow out a little bit.
I don't calm down for nothing.
Gotta mellow out, gotta match his energy a little bit.
Thanks for coming up here and saying hello to us today. The dynamic duo of real estate queens on YouTube.
Yes.
We're hitting at an hour and 19 minutes. I want everybody to say thank you so much to Sheheedah for coming. Did I say it right? Sheheedah?
Yep, I'm here. I'm coming.
Sheheedah. I said it right.
I'm just rolling with the punches at this point. I'm like, okay, is my Wi-Fi or what's happening? So I'm just I hear the majority of what I just come back in.
Yeah. Sheheedah Hill, thank you so much for spending your Sunday with us. I want everybody to say thank you to her. And if you have any questions after the stream is over and you want to talk to Sheheedah, look, she has a YouTube channel and all of her information's there. She has fantastic videos with tens of thousands of views with very viable, good information. Go over there, check her out, see what she's got there, and make sure you subscribe and hit that notification bell so you get all of her videos. Look at her. See,
thank you so much. I really appreciate it for you having me on. I love your channel. I have to have you on mine so we can talk all about tiny homes.
Yeah.
Yes.
Yeah, well, we could do that in the future because I love tiny homes, and I do believe it's the answer to a lot of the affordability crisis for the low income families. Yes. Not just tiny homes. Oh, well, we'll talk about it on your channel.
We'll talk about it. Yes, I'll have
you. Yeah, because I'll end up like flapping my lips forever.
Gotcha.
Everybody, thank you for spending the last hour and 20 minutes of you. At one point, we were over at 511 people that were on the stream watching us. So I want to say thank you to every single one of you for stopping in today and saying hello and watching us and spend some time with us. If you need a real estate agent in your specific area and you have had a hard time, look, reach out to me on my website, KristinaSmallhorn.com. Go at the bottom, fill out the book here, and I will set you up. Just fill out the referral form, and I'll set you up with a good real estate agent in your area if I know one. And I'll give you a call if you leave your phone number. I can't call you if you don't leave your number. So go ahead and leave your phone number. I'll give you a call. We'll talk about your real estate needs, and I will connect you with a fantastic real estate agent. Any parting words? Any parting words for us? Oh, she froze after I said any parting words. Poor thing, but at least she froze pretty. Oh, there you are. You're back.
Yeah, thank you so much. I really appreciate it. I've enjoyed it.
Thank you. Thank you, everybody. We're going to wave goodbye.
Bye.
Yay. I wonder if Eddie will put on music today, because sometimes he'll put on music and then we'll dance away. And then sometimes he just leaves. Oh, there he is. This is my jam. Don't forget this Tuesday is the tiny home video you don't want to miss.
Yes.
I get a tiny home built in my backyard. Oh, it's gonna be awesome. Don't kill her. We got lots of thank you ladies.